Hey guys, RC Peck here with Fearless Wealth, and what I want to talk with you about is how to find and where to look for the best international stocks to invest in. Now, why this matters is because when you learn how to start to locate where the strongest parts of the market are from a geographic point of view, then you can start to figure out within that geography where the strongest stocks are. And strongest, what I mean by that is stocks that are going up and to the right. Whether you buy an individual stock or you get an ETF, knowing how to know where the strongest stocks are, in this case, we're going to look at the strongest international stocks, is going to help you find stability. And the reason that matters is once you really start to learn more and more how to read price charts, you can start to bring that into your investing. So even if you don't want to be an international, or you do, or you don't have an opinion, you're going to learn how knowing where the strength is, knowing where the money is going to help you bring that stability and consistency into your portfolio. And hey guys, before I start, just want to let you know that I have a do-it-yourself, a self-paced course called Investing for Income. So if you've been looking to get income from the market in a consistent, stable way, or you've been looking to do it for years, but it's been inconsistent or underwhelming, then with this Investing for Income do-it-yourself course, you're absolutely going to learn new information, whether you've been at it a day or 30 years. I can guarantee you that. More information about that at the end. Okay, so what I want to do is I want to jump over to the price charts and let's start looking at why I'm even talking about international. So on the screen here, we basically have three parts to the globe. We have the US is one part. We have all developed markets around the world, ex-US, or not including the US, and then we have emerging markets. So there's three main parts to the globe that we're looking at, and we're going to look at emerging markets. And the main reason is because it's starting to outperform. And let me actually put up, and this is an index I'm going to put up. So you can't actually buy this, but here is the emerging market. Let's get that guy here. So here it is right here. And you can see back to '07 here, between October and March '09. This was the global financial crisis here. Sorry, that's '06, '07. At least in the US, it went from there to there. That was a global financial crisis. So you can see emerging markets, they have done nothing until recently. They are just now breaking out. And what we learn from studying price charts is the longer the base, the higher the space. So the higher this thing can go. And emerging markets has a history that having 100% returns in a year is not unusual. So just comparing that with, and let me just show you, this is basically the entire developed world. This is the MSCI EAFE index. So this one is not as strong as emerging markets. Still needs to break above on this index. It's '07 high. So emerging markets are breaking out. It's beating the developed international markets. So I wanted to just show you why we're even talking about emerging markets, or why I've kind of honed into emerging markets as far as like the best international stocks. So we know that, and I can actually, let me do this. Let's see if we can get this to work. What I want to show you is just looking at these two. We have on this screen is what's called a relative price chart. So if the line is going higher, that means emerging markets is outperforming international developed markets. And you can see it's kind of broken above that zone there and it's going higher. So if you're looking for international, okay, in the US it would be international, in Europe it would be emerging market, in emerging market would be finally locally, our own stock markets are doing it. But we're gonna wanna look in the emerging market arena. Okay, now most people just know emerging markets through a ticker symbol, EEM. It's not the biggest market capitalized ETF or assets under management, but it's probably the most well-known one. Now, this includes dividends reinvested, so it looks like it actually broke out here. That's when Trump had his trade wars tweet, and the whole world, a lot of people like to say risk on, risk off, but Other than the US, the whole world went risk off. So this is the first time it's really broken above that Trump tweet from the beginning of 2018 and moved higher. So we want to be looking at emerging markets. Now, the two areas that I specifically am looking at, and I'm going to zoom in here a little bit because this is a 15-year price chart, which is pretty zoomed out. So the two areas is I want to look at basically the NASDAQ of China. So let's just look at the NASDAQ of China. And it's actually too confusing if I look at it this way. So let me just do it this way right now. So here's the NASDAQ of China. I'm calling it the NASDAQ of China. It's officially called the Invesco China Technology ETF. So a lot of people don't actually know that emerging markets has a lot of technology to it today. It's actually very tech heavy here in 2021. So here is CQQQ. This is the Invesco China Technology. So one, you could just buy this. It's been doing great. It finally broke out of its old lifetime high, which was a triple top. Broke out, consolidated right here, beautifully just went sideways for 3 months between there and there. Broke out again to this right here, consolidated again, and is breaking out again. So you could just buy this ETF and say, okay, I have one of the strongest parts of emerging market, and emerging market is the strongest part geographically. The other one, and we can dig into these, the other one is KWEB. So KWEB is the Crane Shares CSI China Internet. I love the names of these things. So one's internet, one's technology. They will probably share some symbols. But what you could actually do is, as we go through this process, first looking at the world, right? The three areas: international developed, US, and emerging market. From those three, figure out which is the strongest location on the planet. Okay, then the thing is, you could go within that region and start looking at what are some of the sectors, subsectors, countries. And I did some of that work for you and just found that China internet and China technology are two that are breaking out. So we have two sectors that are breaking out while the emerging markets are breaking out. So there's a lot of power behind these guys. So I have these two tabs. You might see it up here at the top. I just went to Google and typed in CQQ holdings, ETF holdings, and same thing. I did KWEB ETF holdings, and I like to usually just go to ETFDB, etfdatabase.com. So I went into kind of looking at the holdings and just to see what was in there, and I just wanted to see if any of them caught my eye. So I first went into KWEB and wanted to see what some of the individual stocks they were holding in that $4 billion of assets that they are managing. And one of them that I thought was kind of interesting is the one I just typed in, which is TAL Education Group. I could see why one might think it's kind of ugly. It has been consolidating since August look, if you bought it here in August, you're having a little trauma right now. Though as of this recording, at least today, it was up 15%. But this type of consolidation should not actually be turned away from, especially if you consider that it was down here at 22 and went up about 280%. So since that, it had a correction back down about 20%. So it corrected 10% of its move, which is not that big a deal. But anyway, TAL is something that's in KWEB that caught my attention. Also, too, this next one I'm typing in here I like also. And we're waiting for a very slow internet. So I like NetEase. And the reason I like it is, let me zoom out here. It's just broken above this consolidation here, right? It tried to break above that $98, couldn't do it, finally broke above it again, and is absolutely taking off to the upside. Now, guys, even if you're not a trader, even if that's not the main point, because this can help you to start going, you know what, understanding price charts. That is going to help me get the filter. That's going to help me get the lens to knowing what's best for my money. Not I trust in like my big box advisor, or I trust in like my pick of the month newsletter, but actually looking at the raw data and understanding how to go, wait, where is the safe place for my money? And learning how to read price charts is one of those key I think it's a life skill, kind of like swimming. If I zoom way out, and let's just see what happens if I zoom way out. Let me see. NetEase has been looking beautiful. So not only has it been looking beautiful during this time period, but now the whole emerging market is getting behind it. And then the last one I want to show that's in KWeb that I find pretty fascinating is this one. IPO'd in 2012, clearly shot from nowhere to $21, and then man, it hit a brick wall in 2015. I'm super zoomed out, so this is a lot of data to be taking in. What I like is there's this saying in understanding how to read price charts: the bigger the base, the higher the space. And this thing, man, if it breaks above that 21, this thing could really, really move higher. And it's on the smaller side. It's $18-ish billion market cap in a world where $100 billion companies are becoming trillion-dollar companies in what seems like 1 year. Here we have a company, and what I like about it is no one knows about it. No one knows about it. So again, we're looking at the best international stocks to invest in. And what I wanted you to really kind of get and see is we can take that macro picture. We can go, okay, where in the world, and let's just take the three parts of the world. Of the three parts, which part is the strongest right now? And then you take that and you can look inside that, right? So we took emerging market as the largest, as the best performing right now. It's been outperforming Europe, and it's now outperforming the US, which, nothing almost outperformed the US for 10 or 12 years. And so now we have emerging market outperforming. And so the idea then is to just almost do like an X-ray. Look in and go, okay, what parts of emerging markets have the power? Where is the money flowing? And we can tell where the money's flowing because that black squiggly line on the screen, it only goes higher when people are wanting to buy more of it, right? They're willing to pay a penny more for it. And then the next day they're willing to pay a couple pennies more. Like that means demand is coming in, right? And you could see it with emerging markets here. You could see it here with emerging markets where once it broke its old high, and let's just say it was right there, demand came in to buy more. Can it correct back down? Of course, guys. It's up at 56. It could easily come back to $49 or $50, which would be, let's just see what that would be here. Let's just say it came right back, 12, 13% correction. Again, for an entire part of the globe, from a population point of view, that's about 2/3 of the world's population. And it is just breaking out. So learning how to read price charts gives people, oftentimes I'll hear people say to me, I need a filter. I need, what's the filter? I don't know who to believe or who to trust, or I like both these people and I don't know which one to follow or believe, or, even if you like both of them. And one of those life skills is understanding how to read a price chart and then knowing what to do and kind of the rules-based process of going through, okay, that part of the world is strengthening. Now let's drill into it. And you could just stop. You could say, you know what? Emerging markets are leading. We'll just buy emerging market. Or you could go into emerging market and see what symbols are in there. In this case, I looked kind of even into a more subsector, and I looked into Chinese internet and Chinese technology to find something that maybe no one was talking about. And once you're taught how to do it, it literally takes you a few minutes. It's actually kind of fun. And finding VIPS, I'll just put that on there. VIPS. But man, if VIP, I can zoom in, but we can see here that there's this consolidation right now between 28 to 30. Let's just call it 28 to 30. I think I was saying $21 before. It's my eyesight, guys. So this thing is coiling just like it coiled last time it was here, between 28 and 30. And man, that thing breaks out. It trades 5 million shares. That means most likely that's going to be a very liquid position. And again, I don't hear anyone talking about VIP. VIP shop. I almost never learn the names of symbols because I don't think it matters. I just learn the letter combinations that helps me stay detached. And I've learned the more detached you are from what you earn, the more your portfolio actually grows. So guys, if you like this video, you're gonna love the 2 videos I have after this. And please leave a comment if you have a comment or question. And also to hit the like button because Google and YouTube like that. Thanks guys for being on this video, and I look forward to seeing you on the next one. Okay, I'll talk to you then. Bye.